Okay, final keynote of the session. I'd like to invite Mr. Abhish Saha onto the stage. Abhish is from Merchant Suite. Welcome. Good luck.
I'm from Merchant Suite. I'm the general manager of a team of professionals that look after everything from card acceptance, transmission and storage, and working with acquirers around the world. Yes, I am a vendor, but I'm not going to try and give you a big sales pitch here today. I'm more going to talk about my experience because I have come from an acquiring background, 7 years at the Commonwealth Bank to be precise. 7 very big years of working on innovative solutions, and I guess the last 6 years have been with Merchant Suite, trying to develop further solutions out there. But what I wanted to share with you is the models that I've been involved with over the last 13 years in the acquiring game, and in terms of how successful these different models have been when it comes to card not present or e-commerce in general. Yes, I've spoken to quite a lot of merchants around the years, and I just want to give you a real quick story. Back in 2006 or so, when I first entered the space, my general manager basically needed someone to look after this new thing called PCI DSS compliance. We were given a nice little mandate to get all of our client base compliant within 12 months or so. Phenomenal job to get, in addition to having to run the card not present acquiring portfolio. And I can tell you the next 6 months of conversations with merchants were extremely not positive. Right? Quite a few colourful words were used in terms of becoming compliant within a year or two. The gist of the story was, Abhish, you've got to be kidding me. We have to spend $7 million or so to get compliant, and we've got other things to do like run a business. And that cut across everything from airlines through to large retailers and online retailers. So I went back to the drawing board and then thought through in terms of how can I get this compliance happening? How can I reduce the risk of, as an acquirer, in terms of getting a fine? And by the way, if you are a merchant, please do stay, because there are a few lessons in this story for you as well, and they're around keeping your acquirers honest. Now, basically, the main sort of thing that I was talking about in terms of, just by way of background, just to let you know in terms of the scale of Merchant Suite, we have about 35,000 businesses on the platform. And by businesses, I mean we've got about well over 10 to 15,000 government entities, and also large retailers on the platform. So it's not just SMEs that are using the platform. You've heard my accent, so yes, I am from Australia, and yes, we are strongest in the Australian market, but we do have a presence across the Middle East, Africa, Singapore, and a few of the other Asian markets as well. And I guess we're here in Europe now to try and work on partnerships with acquirers and merchants to basically see if the model works well as it has in the other markets. And in terms of scale, we're used by SMEs, yes, but we are used to everything up to even public transport. So the public transport system in Sydney actually uses our platform for its top-ups for all of the commuters. So if we're down, the Minister for Transport is on the phone to our partner, and our partner's on the phone to me, and it's not a good phone call to get. So we are very much focused on the enterprise-grade availability side of things. As I said, I'm not going to try and sell to you, so that's the end of my sales pitch. Now, my next question for the acquirers in the room. Are you on an alta growth pathway? The graphs up there are real experience over the last 13 or so years that I've gone through, and looking at different styles of business models and acquiring solution models that I've worked with, you can basically see you've got the orange line there at about 5-fold the growth in about 9 to 10 years, and the other one which had over 30-fold growth in terms of merchant relationships in the same period. And it's basically an acquirer offering both models or both sets of solutions. Merchants having the choice to pick one. They're picking the solution set that's on the blue line. Now, I'm sure some of you will say the blue one must be damn cheap because everybody's buying it. I can tell you the merchants are not buying the cheaper solution. Merchants are buying the solution that costs about 50% more. That's where the growth has been, of the more expensive solution. You might be asking, well, why is that? Why are they paying more? The acquiring game typically is fought on price. Does everyone agree with that? There's a lot of price competition in the acquiring space. With the solution set on the blue line, you've basically moved away from price and you've gone into business value. So in terms of the value you're adding to the business, how you're helping the merchant reduce overheads on their side. Some of the overheads the other speakers before me just were talking about in terms of compliance and risk management. And effectively, it shows that the blue line curve is the alta growth curve, because online space, internet, there's been a lot of traffic growth, transactional growth, and I'd say the basic solution at the bottom there has followed market, possibly gone a little bit behind market, whereas the one on the other curve has gone well ahead of the market. Well, how do you get there? How do you get onto that ultra growth curve? Or how did I get my portfolio onto the ultra growth curve? Well, the first part, when I first went on that journey, it was all about removing the barriers of entry or barriers of staying compliant. Some of those early discussions I talked about with merchants, where PCI compliance was just something unachievable, and that's to do that not just for the merchant, but also for all parts of the ecosystem. So for yourself as an acquirer, and also the consumers that are right at the front of the food chain. Flexibility. So giving them a one solution that is very rigid and it doesn't move, and everybody has to comply to your specs and build to your APIs or your file specs. That makes it very hard for merchants to transition, and also for merchants across different industries to use the same sort of solution. So flexibility was key. So that's something that we really worked on when we designed our solution set. And the next part is, and I've alluded to it before, is providing real business value. Giving a merchant an API and telling them, go and do all the heavy lifting and all the compliance work and everything else around your front ends and your back ends of processing, that works well, but that works well if you want to be on that orange line that I had earlier, the one that has the lower growth curve. Being in the alta growth curve, you need to add more value than that. You need to add a lot more value for quite a few reasons. And the business process side is really important. If you can save a merchant FTE or personnel around handling reconciliation or handling card decline code reductions around for your recurring merchants, those sort of things are big high cost items for them. If you can provide those sort of solutions for them that sit in their business processes, there are savings there. It actually justifies you being able to charge more. Okay, and that's the model that we went with, and it worked extremely well. Don't let the merchants focus on payment technology. Move that focus away from them as much as you can. Do all the heavy lifting for them when it comes to new digital wallets that are coming out, the 3DSs and the MPIs and all the other sort of wonderful things that come in. So that's the secret sauce of being on that blue curve as opposed to the orange curve. But that's very easily said. And all of the actual detail of getting or executing on it is quite difficult. So in terms of looking after that ecosystem, making it more flexible and removing the barriers, the first thing is consumers. Obviously, there's a thing called financial sentiment. We've all, probably most of us here, old enough to experience the GFC and post-GFC era. And those sort of things, yes, it can have an impact in terms of turnover or volume of what you're processing. But on the counter side, on our platform, what we saw was actually an increase in transaction volume, a rather rapid one. A lot of our clientele were in the utility space or government space, even in the retail space. And I think Mash was talking earlier around breaking things up into smaller tickets. Well, we created solutions for hardship cases. So when the credit crunch really hit, a lot of consumers were struggling to pay, so we provided solutions to make it easier for merchants to provide for hardship case payments. From our perspective, more clicks, and we love more clicks in our business, but the tickets were similar in size. The merchants were happy because they weren't chasing as many debts and as writing off as many debts, and the merchants were also happy because their customers were happy and not complaining. right? And they weren't churning customers and losing them. Technology and devices, we're all consumers here. We all change phones regularly. They're constantly upgrading, and even in terms of devices, believe it or not, last time I checked the device set that uses our platform in terms of consumers, we get quite a few payments from a PlayStation 2 still, believe it or not, or an Xbox console. So it's not just mobile phones that are driving a lot of the traffic, but there's other types of devices out there that need to be catered for. And the next part is payment preferences. So as a merchant, it's like a bucket, and you're trying to catch all the possible ways of receiving these funds. And as you can see, there's so many different ways of a customer wanting to pay or having preferences to pay. So when you look at that merchant's experience, there's a hell of a lot of technology that needs to be looked after, a lot of things that need to be done to be able to be where their consumers are, and also then accept the payment the way the consumer wants to pay them. Easy challenge to come across to make it easy for the merchant, isn't it? From the merchant's perspective, a lot of them have legacy systems that need interfacing to, that need building to. Giving them just an API means they have to go and build into these legacy systems. I'll give you an example. In terms of our journey, we've got well over 1,000 file formats for different ERP systems and CRMs to be able to really board these merchants very quickly. And the reason for that is it actually takes away that IT build. They may still have their web interfaces integrating to the APIs and other tool sets that we have, but then their back-end systems needing reconciliation and other sort of feeds. Chances are we've already built a lot of the ERP interfaces that are needed to bring the large merchants on quicker, and the business case for them actually starts to drop rapidly around integration and boarding. And that was, again, part of that blue curve I showed you earlier. These larger merchants were coming on a lot quicker, and the beauty of the platform was to make sure that we helped with PCI compliance wherever we could, provide as many hosted interfaces that were malleable to meet the different merchants' requirements, and that removed a lot of the PCI compliance overheads as well. As you can see, quite a lot of merchants spend a lot of money on PCI compliance, and we've tried to reduce the footprint of PCI in their business quite significantly. At the end of the day, anything you can do with your payment technology as an acquirer to reduce the overheads of payment acceptance for merchants, and that's not your price, don't reduce your price, lift your price, but give them more value and reduce their IT spend on the payment technology. Let them focus on marketing their business to grow their business and get more volume on their business, which helps you as the acquirer. And of course, the last but most important, last but least part of the last part of the ecosystem that we're all in. Yes, merchant accounts, sales and distribution is very important. Having a payment gateway API is important. But what about the risk of your portfolio? That first day that I walked into my role all those years ago at the Commonwealth Bank, I walked in and it was purely API-based products that were being sold. In the two-party mode, everyone remember two-party mode? Extremely high risk from a PCI perspective because I had no idea what technology was on the other side of that API. I had no idea whether it was safe, secure, unsecured, who had access to it. As an acquirer, I had a significant PCI compliance exposure to fines, and also having to go talk to a customer or a merchant about finding them is not a positive experience either. Excuse me. So a lot of that, things they're thinking around just providing API solutions. Yes, they're flexible, but you're making your merchant do a lot of hard work, but you're also exposing yourself to the quality of the work that's been done at the merchant side. So no offense to any merchants here, you have good developers, I'm sure you do. But you really don't know if they're using someone from, like one of those websites, $500, they got the integration done, and then there's no ongoing patching and no ongoing looking after that integration. You as the acquirer, if the merchant can't pay that fine, you pay that fine. So that's a really big risk that's out there. And that's for the last point there is effectively If you do have more solutions that sit in front of it, you need to make sure that they stay compliant. But not just compliant from your perspective, but also compliant for the merchant. We recently had a mandate last year in the Australian market around surcharging or convenience fee. I know in some markets it's not allowed, but in Australia it is allowed, but a very, very distinct ruling came out that said that if you are surcharging, you need to surcharge to the very same card type that's being processed. So effectively, debit card surcharge is lower than a normal credit card, and again, higher for foreign cards. And you couldn't charge higher for any amount. You had to charge what you were being charged as a merchant. The clients that were using our platform in terms of all the hosted interfaces, when that mandate came in, they were compliant the very first day. For them, it was logging into our back office, changing the rates that they wanted per bin type or per type of card in terms of interchange plus costings, and they were done for that compliance program. For merchants that didn't follow or didn't use our platform, a lot of them are still trying to get compliant, and they're getting fines. They have surcharging that basically was very flat. It was making a profit on their fees. And they've effectively managed to obtain fines for that, and they're still claiming to still be building all the bin lookups and everything else around working out which interchange goes where. So in terms of a bit more of an example of why the business value focused platform is more successful. Just to get into a little bit more detail, I won't dive into the actual boxes, but what you see there is a typical merchant implementation. On the larger end of town, of course, and we've chosen to demonstrate something that has multiple businesses. We actually do have a lot of groups of businesses on board, like franchises and schools, or government entities with lots of sub-entities. And at the end of the day, in terms of all those different channels of acceptance that they have, you're looking at different vendors per channel of acceptance possibly. Also different vendors involved in different elements of technology. So if there's an IVR service, there's an IVR provider for hardware, a telco provider, and then you've got the gateway in the background. And all of that needs to be maintained. A new PCI standard comes up a notch. You have to go and update that solution along with the other channels and all the other solution sets there. So a payment gateway API provides, yes, an API, but does not help you with any of the other end user technology that needs to sit in front of it. Also, when things go wrong, what's the first thing that happens? It's not my fault. It's that guy's fault. It's the other vendor. Go talk to them. That vendor will blame another vendor. So time to resolution, potential points of failure are significantly higher with this model. In the model that I was showing you earlier with the blue line, the ultra growth curve, that actually changes because the solutions are end to end. From a merchant's perspective, there's only one person you need to basically run after to make sure things are working and they're operating. It's the one potential point of failure. My director loves to say the one butt that you need to kick. But it is one butt that will actually work very hard to make sure that the whole ecosystem that's working on has full control and keeps it up and running for you. From a PCI compliance perspective, it's actually part of the service. So that blue line, you're basically saying use our interfaces, you'll be PCI compliant, even if the standards change and you're using our interfaces, you inherit that compliance. If you're using your own solution out the front of it, you have to look after that. So again, the more of those value-added services, or value-added business-focused services that sit in front of that API, the lower the overheads there are for our merchants. And I'll give you an example. Sydney Water, one of the largest utilities in Australia, looks after the Sydney Basin in terms of water. They've been a customer on our platform for over 17 years. They started all those years ago just on IVR for automated phone payments when that was the latest and greatest technology. And as technology moved on, we kept adding more and more channels to it, and they kept using all of those channels. We've kept them in line with all that payment technology out there, all the consumer demand out there for the different channels, and they're still on the platform. From their perspective, their PCI compliance has always been a very low overhead. They say the guys at Merchant Suite are looking after all that for us, tick in the box. It is as simple as that for them. Obviously, their own processes need to be looked at as well. But then from a payment management overhead point of view, they've made all those initial savings by removing a lot of technology to host themselves and relying on the technology that the Merchant Suite platform provides. And they really do like calling us when things go wrong because they know they will fix it and they don't have to run after anybody else. So it's always a pleasant experience. Again, a pictorial sort of example. Typical payment gateway will give you a few little green boxes there. So very limited in terms of functionality, but in terms of a Merchant Suite type solution, again, a little sales pitch there for you. It's a much more comprehensive set of solutions across different use cases for a business. Our typical merchants will be using easily 10 to 15 of these solutions across the whole business, be it out of operations, be it out of call centres, be it out of their web or mobile technologies or their recurring billing engines. Every new feature we add, they basically can take that up or not take it up. Every time we upgrade, they inherit the upgrades. Again, with all these channels, the PCI DSS footprint is significantly lower. In terms of what we do, we operate in several models with acquirers around the world. We don't do it-yourself. Do-it-yourself is you as the acquirer going off and doing your own thing. We have a co-label model, which allows an acquirer to effectively sell Merchant Suite along with their brand. There's a co-link that we provide. It allows all of your merchants to go through that, and it's locked to your acquiring. We will not push those clients to anywhere else. If you really wanted to spend up a little bit more and basically have your own brand, the Commonwealth Bank is one of those sort of clients that are white labelling of our platform. Basically have your brand and your link and your logo and everything, and the merchants experience your brand. They don't know anything about what's happening in the background. That's our white label model. And the do-it-yourself, as you can see, if you want to build all these applications with lots of different providers, imagine as a bank, I've been there, the contractual negotiations, the SLA management, ongoing management, the BAU, the support, and the experience to your merchants. How many different phone numbers are you going to give your merchants to call when something's gone wrong with the different vendors? And also when something goes wrong, which vendor can you rely on having said, it's not me, it's the other guy? With the Premier Commerce white label model and the Merchant Suite co-label model, you're effectively dealing with one vendor or one partner, and that lightens the load of having to look after this technology because we can provide all the support to your merchants. In my team, I have a whole series of pre-sales and implementations teams, along with very qualified product teams that have mostly been from acquiring background as well. So we are a tech provider, but we have a lot of acquiring in our DNA. So just in summation, which growth curve do you want your acquiring business to be on? Few big factors is that there's much more acquisition capabilities with a multifaceted platform like ours. Also lower churn. Because you've got all this functionality that you're providing as an acquirer, is your merchant going to look at another acquirer? The two main reasons we lose clients are, one, they've gone out of business, and two, they've been acquired by another business that's banked elsewhere. We very rarely lose clients because of any other reasons. And also from an acquirer perspective, open up more revenue streams for yourself. So it's not just about the merchant service fee or MDR, I think it's called in some markets. Get a transaction fee for processing payments. Get a transaction fee for sending out an SMS that's related to a payment. So those are sort of the summation remarks. And to finish off, I'll just show you an example of one of our little innovative solutions.
Good afternoon, you're speaking with Sam. How can I help you? Hi Sam, I'd like to make a payment please.
Certainly, and how would you like to pay?
I'd like to use Apple Pay.
Could I please have your mobile number?
0416 815.
Can I please have the invoice number?
It's 77631.
Okay, and how much would you like to pay today?
$100, thanks.
I've just sent a message to you. Please tap on the link, select Apple Pay and follow the instructions. I'll stay on the line until the payment is confirmed. The payment was successful. Is there anything else I can help you with?
No, that's all, thanks.
You're welcome. Thank you for your call and have a great day.
You too.
So the most common question I get is, why is the guy ringing up to make an Apple Pay payment? The answer is, imagine that was an outbound phone call, or imagine that was a real detailed call, sales call, and they made that payment. Rather than letting that customer walk away to the website or somewhere else to make that payment, you've basically made a payment through Moto, mail order, telephone order mode, but you've turned it into a 3DS transaction by moving into the online domain. So it's actually helping merchants reduce their risk when it comes to Moto significantly. And as you saw the little clock there, imagine the full process of reading out a card number. It takes about 2.5 to 3 minutes based on a lot of the clientele that have given us feedback. Operationally, we've just cut off over 1.5 minutes of a payment processing course. And think about the FTE impact to merchants again.
I would encourage everyone here to meet Abish at his stand, which is outside. Thank you very much.
No problem.
A warm hand.
Thank you.